I'm a huge believer in Tesla. I own plenty of Tesla stock, but looking in my portfolio, my Tesla holdings are currently 50% down. So we really need to speak about where Tesla is gonna be heading from here onwards, whether there's more downside to come or where we already are out of the woods yet. So stay tuned as we're talking about both our more imminent scenario and the long-term outlook for Tesla. And we dive also into a few fundamentals right after the intro. So recently Tesla had their Q1 earnings report and it did not at all look good. And it even was way worse than the expectations of the experts. Because in Q1 of 2025, Tesla reported earnings of only 15 cents per share. Not a whole lot for a stock that is trading at way over $200 per share. And of course, that did not come as a full surprise. Already expectations and the forecast have been way lower than in the previous quarter at 35 cents per share only, but still those 15 cents still came in almost 60% lower than the expectations of the experts. So that really is a surprise in the worst kind. And it doesn't really get all that much better if we take a look on the broader development, because as you can see here on the market share of Tesla vehicles by region, straight out of the Tesla earnings report, by the way, you can see here that ever since Q3, Q4, depending on the region, Q3, Q4 of 2023, Tesla has reached its peak in market share of Tesla vehicles in those set regions of the US and Canada, Europe and China. And ever since, so for the better part of 2 years by now, Tesla market share has been stagnating or even falling in some cases here. Stagnating basically only in China. In both the US and Canada and in Europe, Tesla market share is falling. That in and of itself is bad enough, but what Tesla probably does not want you to know is the fact that with their posted earnings of 409 million in this quarter of Q1 2025, 595 million came out of them selling CO2 certificates, carbon credits. And if you're any good in math, 595 million out of 409, that doesn't really add up. So to make it more clear, without those carbon credits that Tesla is selling to other market competitors, they would not have posted an earning of 409 million, but they would have posted a loss of 186 million in this quarter alone. So what are those carbon credits then that brought in over $500 million for Tesla in this quarter alone? Carbon credits are credits that are credited by the government to automakers. So whatever automaker is there registered in the US, for example, they get carbon credits according to the number of cars they produce. That whole system is part of the economic emissions deal, and that basically means if you are a, let's say, old school automaker, you make a lot of high-powered petrol engine cars with a lot of emissions, of course, obviously, you cannot really meet the standards for the emissions that you would need to achieve over the whole of your production fleet. And so to still stay operable, you would need to purchase carbon credits from companies that manage to stay way below the emissions threshold with their portfolio. And so Tesla making only electric vehicles, obviously the emissions are like zero, at least in that mathematical system there is zero. And so they can then sell their carbon credits to other companies like maybe Ford, like Cadillac, Chevrolet, you name them. So quite frankly, those $600 million of earnings that Tesla posted in just this Q1 are basically a gift from the government to Tesla. There's no other way to put it really. And dependent on where you stand in this whole climate debate, you can say, lovely, amazing, that's just the right way to go. Or you can say, well, I'm somewhat critical of that. The bad part about that whole thing is that under the Trump administration, obviously, this whole push towards zero emissions, this whole push towards electric vehicles, towards green energy isn't at all as pursued as under the Biden government. So there's quite a few members currently of the Trump cabinet that would rather get rid of this whole emissions system and this whole carbon credits totally. And if that was to become reality in the near future, Tesla's already low earnings would in an instant slip into the red. Real deep into the red. I mean, sure, of course, there still is the robots that Tesla is developing, but those Optimus machines will probably only be ready for market deployment in, I don't know, late 2026 at best, and not at scale, of course, at first. So up until this point, Tesla really has quite a few financial hurdles to jump over. But for now, that's really enough of the bad news. As I told you before, I still am a believer in Tesla. I think Elon Musk is maybe the most genius CEO of current times. And that's why with all this negative negative news and with all this bad macro data and macro information, I still am a huge believer in Tesla, and I will just share with you now our outlook on the stock. Where do we see the chart to move imminently, and where do we see the long-term targets for Tesla? And as I take you over here right now to the imminent chart here on our 4-hour chart, and by the way, if you are like myself an investor into Tesla, you can get daily updates on Tesla and many other companies directly via the link in the description down there. Check it out. If you get subscribed to a daily market analysis service, you will not at all miss any updates. You will get notifications on all entries that we do, on all target zones, all trading areas. So if you got any money invested into Tesla, I would highly recommend you checking that out. So back to the chart now. So all the way back in December of 2024, we concluded that we have seen an overreaching wave B top. Where exactly that falls in the bigger picture, I'll just share with you on the more broader outlook in just a second. But ever since this wave B top here, we see currently the chart as in an 1, 2, 3 waves upward structure so far, and we are currently just in the middle of wave 3 out of 5. So as you can see here with our count in red, we estimate, because as you can see here with our count in red, we conclude that we have yet seen a 1, a 2, and we will see the ending of a 3, then a countercorrective recovery in a wave 4 upwards again, and then a final wave 5 to mark the final sell-off into our target zone, which I will show you in just a second on the broader outlook. And for this bluish count here in the 1, 2, 3, 4 of the overreaching wave 3, we estimate that we have yet not seen the wave 4 top in, but that we would form the wave 4 top somewhere here in that area of roughly between 290 all the way up to 340 maybe. To be more precise, the preferred target would be somewhere between 299 up until 325. That will be the perfectly preferred scenario for the pivot point for our recovery wave 4 out of the overreaching wave 3. But to stay within the regulatory framework of Elliott Wave, we could go all the way up until 373. That would be only this would be the point where we invalidate our primary scenario. So even if we go quite a bit higher than 325 in this most imminent move, we would still not yet have broken the structure. We would only break the overreaching structure as soon as we climb substantially over 373. And what does that mean on the broader outlook? Here on the broader outlook, you see that with this current wave B, we are in the 3-part corrective move ever since this overreaching wave 1 top that we have established back in November of 2021. And ever since, we've been in an A, B, C towards an overreaching wave A, followed by a W, X, Y towards an overreaching wave B. And we are now currently in the development of this final wave C, of this flat correction, which we currently estimate, as I just showed you here, in a 1, 2, 3, 4, 5 waves downwards trend. And then, and only then, after we have finished this 5 waves downwards move, would we estimate the pivot point and the reversal for the price action in Tesla, and we would estimate the low for our wave 2. And only at this point would we, from a charting perspective, see a new foundation for a sustained Tesla bull run to really continue and kick off again. So that means, of course, that from current levels up until the very top of our target zone, we would still see at least another sell-off of 38%, and up until the optimum target for our wave C, we would still see 65% more downwards action. So that really is a quite substantial risk to the downside. That's why me personally, currently, if I not had any positions yet, I would not go into the stock at all. I would really wait for those levels to come around, because from those levels, then let's just start with the optimum. Let's just start from the very top of our target zone here. From these levels up until the target for our wave 3 move, this would still be an easy 500% gain. So me personally, I will wait patiently for this target zone to come around. I would not let myself be pushed into FOMO, jumping into Tesla here, because we're in no man's land. I mean, look at this. The top is long past, and we are quite a ways off from the estimated bottom that we see in the market. So we are pretty much in the middle of no man's land. That's why I would also likewise be cautious going into short positions. We are already from the top over 40% down. So after such a violent down move, I would not jump into the market, neither on a long nor on a short position. But of course, that's no investment advice. That's only what I would do. Whatever you do is completely up to you. And if you want to stay up to date with all those developments, as just mentioned, link down there in the description below. And likewise, you will get video updates free of charge, completely free, here in this this channel, so consider subscribing, turning on the bell notifications. See you in the next one. Up until then, take care. Bye-bye.